Hi, Jack. Thanks for joining me on the podcast today.
Thank you for having me.
Clearly a very experienced investor and developer, and I'm looking forward to this conversation today. I've been following a lot of what you and your business partner and your brother have been up to on social media. I think we've crossed paths at a few of the industry events. I'm sure I've seen you guys sort of strolling onto the stage to collect some awards as well, which I'm sure we'll get onto. But Jack, can you tell us and our listeners a little bit more about yourself and your property business to get started?
Yeah, of course. So I was technically born into property. My father was a builder, then ran a plant and tool hire company. My grandfather on my other side ran a construction business. So every house I lived in was built by, basically my father. But I never understood why they never owned any property other than their personal home. There was no buy-to-lets, HMOs, commercial buildings, mixed-use investments, developments, doing a site that's not theirs. So I kind of already knew how to build stuff. I was very much hands-on. When I actually first set out just after university, I was building houses from the ground up, doing everything. But I never really understood why there was an income generating plays and, value enhancement and buying and refurbishing and then refinancing that value back out. So I started to sort of educate myself in that space quite profusely, because to go back to the first deal I did, bought cash, built cash, sold, and I was like, cool, this works. But it was one project, 1 year, very slow, no scalability. So I was like, right, how do I do more of this and grow this into more of a business rather than just a project by project case? And that's now sort of obviously led us into where we are today, where we run a development company, a measured surveying company. We run a HMO investment portfolio. We also run a social housing portfolio, and we're quite a corporate outfit now. I see us as 5 businesses in the group, and we all have our own sort of linear focus, but we all feed into each other, and our team of 30 now helps me deliver what we do today.
Wow, so a bit of an empire. And I'm sure there's a lot of people listening to this episode who are interested in how you got there, because that obviously hasn't happened overnight. And I'm sure the journey to get where you are now hasn't been completely linear. So I suppose I'd like to start with kind of how you've approached property as a business. You're clearly very entrepreneurial, Jack. And I think there's quite a difference between just being an investor, just being a landlord, and being a property business owner. But can you talk me through how you've got to where you are and what sort of things had to happen along the way to enable you or even push you to take that next step, or maybe think about moving sideways into partnerships? And I know also that you've got trading businesses alongside your asset and acquisition businesses as well. And it'd be interesting to know how that whole thing now fits together, but also how you ended up getting there and building that over time.
Yeah, this is over 10 years really. So it didn't happen overnight. And I kind of feel like we're now at a point where we're trading, certainly in our development company, at a size that we feel that is a good size for us, what I would call like critical mass for a business. We've been growing it for 10 years to get to where we are today. So that's definitely been part of visionary, and all of the goals change every year. But Ben works for the Berkeley Group and I grew up on site. So we knew we wanted to run a development company. That was kind of like the sort of childhood blue sky thinking development company. And then you go down into more detail about what does that look like. Where it started out is Ben wanted to be building sort of 6-story skyscrapers. And I was quite comfortable with like private high-end residential developments around the home counties. And we've sort of forged basically our competitive advantage, which is I've got a sales background before I moved full-time into property, and Ben's obviously got a quite heavy design and delivery hat that he wears very well. So I was like, right, where are we best set? We're good at acquiring stuff. We're good at raising capital because the deals are quite creative and they get a good feedback in the sort of private investment space. And then Ben's good at adding value in design and sort of value engineering in the build. So we've now forged our skill set is kind of taking a lot of old buildings and repurposing them, just semi-similar to yourselves, because we can buy at £100 a square foot for a building and be in a market where we can exit at 600-700 a square foot. So to get there, though, we've done tons of other things. We've done end of terrace, we've done cluster flats, we've done planning uplifts, we've done back-to-back trades, we've done mixed-use developments. We've literally done everything that you can name across the tin. So across the businesses, it's 86 sites projects. So yeah, I feel like we've hustled and been through that hustle phase and been like, right, that didn't work, that did work, this was good, this was bad, we like that was easy. Greater listed buildings take a lot longer, all of that learning. And we learned by activity, which is stressful at times because things approach you and you don't really expect them. But yeah, we forged now to where our business is today, which has basically been forward funded from the deals and the profits that we've made in the past to build a team. We've got quite an experienced team now, and we know that we should be delivering sort of 3 to 10 million GDV sites because that pays dividends into our business really well because our team are working on the right size projects and we can create good value on those. And then as far as like the sister companies go, it kind of just makes sense. Like for an example, our surveying business, we're probably spending 50 grand a year across the group in measured surveys, topographical surveys, and to hire the kit and to hire a new member of team to bring that in-house was less than what it was costing us. So it was a no-brainer. And then we actually only did that because we had a business plan to grow a surveying business. I wouldn't implore anyone bringing everything in-house just for the sake of that, because it's sometimes nice to not have that overhead always bolted into the machine. But we wanted to grow that business, so we're like, let's try it. And that's exactly what we did. One of our surveyors moved into one of our HMOs, and I said, what do you do? And he said, I've just been made redundant from surveying company. And I said, would you want to start work on Monday? And he did. And that was how we set that business up. And we just did a 52 grand month last month. So it's easy to see opportunity and to fix problems when you're an entrepreneur. And actually the difficulty is to say no. So we're now actually banned from new businesses and new ideas and things because there's just not enough time in the day and life gets in the way. So that's how we've grown the sister companies around the businesses. And we love service-based businesses. In a service-based business, you can win business and trade business in a day. Whereas in development, you're 3 years in a gig that may or may not work out that fruitful. And some of it is out of your control. You might be playing over some market risk there as well. So having service-based businesses within a group of a company where you've got slower development, we think is sensible because it helps cover overheads in the short term. You can obviously feed overheads between the businesses and lean on others when you need to. And that's how we've grown the sort of the group of businesses.
I completely agree with you. And actually, there's a huge amount of similarity, I think, between you and I. I feel the same about trading businesses, service-based businesses, alongside a development business. And actually, I've said on a number of occasions that I don't think I'd want to actually develop without those other businesses now. It's so arid, when you're developing for so long, you're just sort of plowing pretty much everything that you've got, time, resource, and certainly capital into deals, aren't you? And just having those predictable revenue generating businesses in the background is a great form of stability. And I think that, you're a brilliant example of this, but I've seen lots of people, successful developers, and I think the most successful do have something like that, on the side or in the background as well. And I think for a lot of people getting started in property, building a portfolio and eventually moving on to bigger deals is something that they want to aspire to. And I think the realities are often quite different to the expectations. And I think that how intensive these sorts of developments can be, it can be quite shocking once you get started. So for anyone listening today that would ultimately like to get there, you don't need to start there, but I would certainly recommend maybe thinking about other verticals or other things that you could potentially do to, like Jack has outlined, give you a certain degree of predictability and stability alongside developing. When you went to university, Jack, did you know that or expect to come out of the other end of all of that and build a property business and do this? Or was that something that matured over time?
Yeah, so back to the sort of entrepreneurial piece. Classic case of selling sweets at school, selling, various different things in my sort of late teens. And I actually was very, very active from a young age on my eBay account, selling literally anything. I'm definitely like trader personality trait. And I knew I wanted to be in some form of business. I was actually going to throw myself into the fitness industry first and potentially open up my own gym. And really long story short, I had it all lined up, space secured, got change of use planning, ordered all the kit, had it all laid out, had the fit out team ready. But because I had enough cash to do the fit out, but I didn't have the cash to buy the kit, and you probably wouldn't anyway. A lot of people get those on finance because then it's offset monthly against trading income. And I needed a guarantor for it because I was unemployed, setting up a business. I had, I was putting about 150 grand worth of my own cash that I'd saved up into that. I was only sort of 21, and my dad said he'll guarantor me. Then he got to the point of pinch, and then he sort of said, I'm not comfortable with this. I'm not comfortable guarantoring a business that I don't really understand. And it kind of flopped. But when that business was going to be sort of growing, I actually met with another really successful local business owner who runs a chain of gyms, really super successful, grown it from nothing. And I met with him to discuss a JV and see if we could do it together, and I could sort of get rid of the old man and go independently on my own with this new JV partner. And coincidentally, he sort of said, the space isn't big enough. You'll end up getting a good managerial wage in this gym. And I would highly recommend that if you do this, you take a space that's 4 times the size. And it was that someone been there, done that before in those shoes, almost like mentoring exposure that made me think, shit, I probably did a lot too much too soon before seeking that advice from someone that's done it before. And actually my JV partner was uncomfortable because they hadn't been and walked those shoes before. So at that point I was already doing some property stuff, and I was like, do I go and find a bigger space and run a bigger thing in like fitness, health and fitness? Or do I just double down into property? And at this point, this is while I was almost opening the gym. I knew I'd go into real estate at some point. But in that process, I'd geared the lease from, I think it was something like £6 a square foot all the way up to like £12 a square foot. And I basically made the margin of the delta for the new gym that came in. So just on almost like on a lease renewal basis, I'd up the lease and I'd saw that there was value that was created just purely in the lease. I was like, great. So property is a cash flowing business if you can do contracts like that. So essentially a rent to rent, but on like a different scale in an industrial building. And then I already knew how to build. And then I started going to seminars, meeting people. And I was like, I already know the bit that a lot of people don't know, which is building. I like that bit doesn't scare me. And I've got loads of family and friends and contacts that have been there, done that before, and can, I can call up, a family friend of ours, godparent, whatever it may be, and just be like, can you come and check out this site with us? And that's what I did back in the day. And then I started learning about HMOs and income. And I was like, I want to do this. So then I just went in took the 150K that I had and just went fully into real estate. And I spent most of that on education and spending money on bettering my knowledge and myself and what I'm doing and meeting the right people and mentorship and non-exec advisory and spreading my way across different strategies. And then I just went in full feet into property, as you can probably tell. And weirdly now, like, I don't deal with the delivery of our development company. Like, I thought that was a thing that I offered to the table, and now that's not really my bag. I just focus on purely acquisitions and capital raising.
Well, tell us a little bit more about that then, Jack. What is your role in the development business? And I suppose I'm also interested to understand how you manage your creative approach to business and entrepreneurship and the different businesses that you now control, and actually dealing with the nuance of projects specific, issues and challenges that happen on almost a daily basis, some of which are pretty big challenges.
Yeah, sure. So yeah, as mentioned, I did a stint in sales, sort of back end of university, and I was very active. I was very process driven, and I believe I can sort of adapt to people that I'm speaking to quite well and understand their requirements to cater for, sales is basically understanding who you're selling to, why you're selling to them, and what they need, and then being able to appease those needs. So I built up a bit of experience of engagement with people and selling, which was in a 360 sales role. So I had to find the business, find the solution, and place the business. So it was very, very exposed in that capacity. But I didn't necessarily think I was like Terry Tibbs, Mr. Salesman, until I met Ben. And I was like, yeah, I'm definitely better than Ben at selling. And he's obviously better than me at a lot of things. And that's where we sort of carved our roles in the business. So to kick off the business, Ben and I, we already had found a deal, and we sort of did the first few projects, we kind of did everything together, everything like end to end, understood all of it. So debt raising package, investment package, legals, conveyancing, agreements, structure, organization structure, tax structure, the delivery, planning. We literally did everything side by side, which I think was very inefficient to actually do it that way. And that's not how we do it at all now. But back then it was really good for both of us to understand how each other work, both of us to understand every single ailment of property and property development and how it works end to end. A lot of people go to me, I'm a project manager, I can go and do a property development. I'm like, 90% of the work is not project management. It's everything out that's running a business. So the way that we fostered our sort of roles is we break up projects into 6 categories and business into 5 categories. Projects is acquisitions, funding, structure, design, delivery, and sales. I do the first 3, Ben does the final 3. So I do acquisitions, funding, and structure. The acquisitions is kind of like my trader mentality, process driven. I love negotiating. I love being creative around negotiating. I love understanding what the seller actually wants. And often if they say, I'm not budging on that price, I go, cool. Well, I want 24 months to get planning and then buy it. And then it actually works out cheaper for us, even though that sounds counterintuitive. The funding side, I feel like Ben and I are both quite good with numbers. Ben's probably a little bit better, but we're both very sharp on numbers. That's where we overlap really well. And I feel that's completely one of the most fundamentals of property. I feel like sometimes I'm more in a finance business because it's just so convoluted. We've got a group of over 20 companies now with hundreds of payments going out every day, and there's a lot of management there. And even tax advisor and accountancy companies look at our structure and go, yeah, that's a lot. Because normally when you see that structure, like for an example, our tax advisor said, you have the same group that I used to manage, which was an offshore wind solar farm company that are worldwide, but they were turning over 300 billion, we're turning over 30 million. So it's like you can't really throw the same professional team into managing your finances. So we overlap on the finance side of things. I tend to head up arranging the debt finance for the acquisition and also the development and the sort of investor relationship and dealing with that to close. So basically I deal to the point where we own the keys and then they get handed to Ben, and then Ben takes it through design, delivery, planning, and also sales or retention, whatever we do at tail end. If we keep it, I'll do the refi. If we don't keep it, he'll do all the sales, is essentially how we handle it. So that's our sort of roles. And in mine and my brother's business, I'm in a really similar role. So I deal with all the acquisitions, I do all of the finance, and I do most of the delivery. My brother's now transitioning more into delivery because, any director doesn't want to be in lettings forever. But he set up the business side of things on the letting side, and is now transitioning over a bit. Very needed to as well, because we've got 7 live projects in the company. And so he's coming into the delivery. So very much leaning into our skills, which I think is absolutely imperative to business and property. And, like we said before the call, sometimes there's silos of roles that don't actually need your skills, and you just need a process and a person to run with it, and then it's good.
Yeah. I think entrepreneurs, particularly entrepreneurs in property, are very guilty of trying to cover off everything, trying to do a bit of everything. And the reality is there's an awful lot to do, especially as you start to ramp up both the volume of projects and the scale of projects. And it can just be too much. Add on top of that, family, work, potentially work, other life commitments, and it can be incredibly difficult. And it sounds like you guys have really leveraged your own strengths and weaknesses. It sounds like you hold one another to account. You've got clearly defined roles and responsibilities. And I'm highlighting this because I think, and this surprises me, and I'm sure that you'll have come across this before, Jack, but I've seen in a number of examples, people in partnerships that don't have that. They are overlapping, they continue to overlap, they spread themselves a little bit too thin, and there's not enough accountability, and often sort of look at the business and wonder why it isn't quite working. I think business partnerships need to work just like you've outlined, where somebody's doing something, somebody's doing anything else, and you're always able to sit down and have a conversation about the stuff that maybe falls through the cracks, or maybe you don't completely agree on. And that there's an interesting question there, which is, you guys run a lot of stuff, and developing throws up so many challenges, from financing to stuff on site, to planning, which way to go. There's so many decisions. I assume that you guys don't always share the same opinions at the outset, but it's important that you don't get stuck on things, and you have to come to a decision. How do you manage that, as business partners? What sort of process do you guys go through?
Yeah, it's a super interesting question. Actually, I was sat down with 2 of our employees yesterday morning talking about disagreements, and you don't have to agree on everything. And that's, you get that at every level of a business. And that is exactly what they were going through. So I completely agree with you. I see a lot of people in the industry that kind of shadow each other and all do the same things, whereas we definitely divide and conquer. When we set out the business, we're on the phone every hour, texting, messaging, WhatsApping, sending through documents. Now we're a larger team. I probably speak to Ben the least in the company. We check in once a week, if not less than that. And there are elements where there's a decision to be made. Ben and I ultimately trust each other to make our own decisions. We will always check in with each other if we feel like a third opinion needs to be held or even voiced before making that decision. If that decision is wrong, we have to back it as a company. If it's wrong, right, or indifferent, someone's made the decision. We've now got to deal with the aftermath. And as a company, we have no blame policy. It is what it is, and we deal with it, because there's no benefit from speaking about, if we would have, granted, lessons learned, that's a different matter, but we don't sort of cry over spilt milk if someone knows that they've made a mistake. And quite frequently, if Ben and I have a disagreement, we will put a fun wager on it. So we will go in, and if it's normally in his area of the business, I'll go, cool, run with that. I disagree, but run with it, 20 quid's on it. And if same is vice versa, and it's in the acquisitions process, then we'll have a wager on it. And that is literally it. Someone backs the decision and we have to go with that decision. Sometimes now, because we've got quite a bigger team, we'll have a vote. And we had a vote on something the other day that I said, if the answer comes up as the opposite of my choice, I'll leave the company. And it came up as the opposite of my choice. So yeah, you've got to kind of have a bit of fun with it, and you're not going to agree on everything, and who cares? It's all of this stuff is vehicles for, you know, you do have to be proud about your projects. But what I was actually talking about disagreeing with was the name of one of our sites. And like at the end of the day, yeah, it did annoy me that it's going to be called that, but I'm too busy to even worry about that. Every time I hear the name, I cringe a little bit.
I think the far more important thing is that you can make a decision and you don't lock horns, and there are mechanisms in place.
Completely. Yeah.
You have that trust. And I think even in property, we know that so much in property moves at a snail's pace, but actually on a micro level, sitting and laboring on decisions while you've got guys on site waiting around or waiting for, you know, a refinance or an important decision, you know, or a purchase, actually those can be incredibly expensive decisions. And I think exactly as you've outlined, you have to be able to make a decision, make it quickly, and, you know, stick, you know, with whatever the result is, and be prepared to deal with that. And there's so few things, I think, in this game, certainly I've learned over the last 20 years, that are black and white. So much of it is grey. And I could share lots of examples of problems that have occurred, decisions that have been made where, you know, not everybody has agreed on. And then the outcome of the decision has been the wrong decision, but inadvertently created a more positive outcome somewhere else along the line, because there are other facets that are sometimes still difficult to see, and there can be a chain of events, and it can often be very predictable. But I do think building property businesses and building partnerships, it's so important. You know, I actually think the success of a partnership really hinges on the ability to do everything that you just outlined, Jack. Yes, we need good deals. Yes, we need the skill to deliver the sites and the project. But I think unless you've got those bits working in the way that you've outlined, it doesn't matter how good your deal is, you know, it's just not going to work, and it's going to be very difficult to build a profitable business from it nonetheless.
Completely agree.
Let's talk about funding then. This is obviously a really big part of your role and your business. And I think that no matter what stage somebody's at, either just starting, maybe kind of, you know, a few deals in, maybe they've done several multi-million-pound deals, finance is always something that it runs out and you need more of. And I always try and encourage people to be thinking about it well before they need it. This is obviously something that you guys spend a lot of time on. So can you talk us through where you get your finance from? Not obviously the specifics, Jack, but the type of lenders that you go to, how you approach that sort of stuff, maybe even how you structure the deals and the way that you stack the capital in your deals, and how you make decisions based on the risk involved in taking finance.
Yeah, of course. The fundamentals are, it has been an imperative part of our business growth to sort of grow our business to where we are. We wouldn't have been able to do it without private investment. And that started out, you know, at a certain time in our journey. And it feels like it's very different and very much more matured and process driven. And, you know, everyone starts out in the same place. So I think we've raised over £18 million worth of private investment now to date. And it started with family and friends, small loans. The first deal we did, we actually crowdfunded all of the costs. I think it was about 300K. And we had something like 350 investors, some with 50 quid and some with £5,000. And that was actually a really good place to start for anyone out there. Crowdfunding is getting a little bit more difficult with compliance, but it means that you borrow a little amount from a lot of people, which is a really good place to start. Because if you borrow £300,000 from one person, you then might not be able to carry that person all the way through all of your projects, especially if you have that good wide exposure. Some of those £5,000 investors might come in again for a little bit more, but obviously you've got to be careful of syndication, not in a compliant platform. But anyway, so we started out with family and friends, and we did start small and grow our sort of portfolio and size of investments that we deal with. You kind of start with people that you know. A lot of people that, you know, we've mentored people before, and we've now got a list of about 160 high net worth investors that we can call upon to send them projects. But it didn't start there. It started with two. And then those two, we asked them to refer 3 people. And then we might have met someone at an event and they recommended 3 people. And then we met, you know, an actual investor at another event, and that got added to the list. So over the last sort of decade, we've been building up that list. And every time we go to fund a deal, I go top to bottom on the list and I contact the ones that, the way it's in an Excel sheet, and it ranks them on the number of investments or value of investments that they've invested before. So the most likely person to lend is always categorizing towards the top. And I start at the top of the list and I go down until I fund the project. But when that was only 3, I then had to figure out, how do I grow this list? And that was all down to always capital raising, like you said, always be going to events and telling people what you do. When you do meet people that have that are likely to have capital, but they're not liquid at the moment, ask them to recommend 3 people. A referral goes way stronger than a cold start. And also speak to people at events and go to the places that you will hopefully meet. One thing that we did I think quite badly in hindsight, but I think it was naivety, is we attended a ton of property events. And the problem with property events is 99% of the people in the room are borrowers and 1% of the people in the room are lenders. So I now try and put myself in rooms where 99% of the room is lenders and I'm the one borrower. And that's now I've started that shift. It becomes a lot easier. Obviously, we've got reputation that we've built, and that also really helps. I would say to anyone out there listening, if you're in the early stages of capital raising, the first few deals are the hardest because you kind of, like, you know, you've got to build confidence in the project and your deliverability, but you don't have any proof of it. So stick with it. It does get easier. And every time you do want it, it does get easier and your confidence builds and it becomes an easier process. But the way we've always structured our investments is we either do a straight loan, one investor per project. So they get a loan against that particular project, they get a second charge against that particular project, and then we have an agreed return. Or we do an equity share. So they still have a second charge. There's no interest accruing on the loan, but we split the profits 50-50. We have one limited company per project. We have one investor per project at Super Clean. And that's all we've done to date. That's all we probably will ever do. We have looked at institutional funding and we looked at sort of grouping it all together. You know, we've got, I think, about 10 million live at the moment. And we thought to ourselves, surely it's easier to go to a bigger outfit, borrow 10 under one facility and not have to have all of these independent conversations, independent monitoring. But actually, when we got offered those terms of what that looks like, we realized as a company, we'd have to 6 times our gross development value delivery. We'd have to 6 times our team to get the same net returns as a company. It's very favored in the institutional's favor. So our typical investors are successful people, typically middle-aged, but I wouldn't necessarily say stereotype it just that amount. They're people that have maybe sold their business or had a very successful career or maybe inherited some capital from, you know, a family and above. And the main thing that's common about all of them, other than the fact, you know, the definition of an investor is capital that they're investing. Other than that, because otherwise they wouldn't be an investor, is they kind of just like us. They kind of back, they kind of back us. They go, you guys know what you're doing. You put in the effort. You're honest. You're not going to, you know, hide something if something goes wrong. You're real. Yeah, it's not really serious. You have a bit of a laugh, and if you cock up, you get it right, correct the problem, but you're honest about it. And that's kind of it. I feel like when you set out on your journey and you haven't got that confidence and you believe it's all very sort of sticky and suits and, you know, very serious, but most of the people that we invest with are people. And the way I think about it is we're helping them build value for their family. And if we can't resonate with their sort of family, then it is the wrong sort of relationship. We're now double downing on that. And we've looked at institutional stuff. And we're actually like, you know what? I'd rather work with 5 independent investors on 5 sites a year. I like the fact that it's just going directly to, you know, someone and something in that family, and you can see that benefit. So that's now how we've just kind of niched our capital raising.
I think you shared some fantastic advice there, and your final point around, you know, people invest in people, I think is so true. We've seen it so often. We're regularly sitting down, having meals and dinner or a few drinks, or even going, you know, out of the country, you know, to spend a bit of time with our investors because, you know, yes, we do some business together, but also, you know, they have a genuine interest in us as a company and vice versa. And I think that that's incredibly valuable. I think a lot of people do undervalue just how important that can be for investors, as well as the fact that what you have is an opportunity for somebody else. There are a lot of people with a lot of money that are looking to do something interesting with it. And the types of projects that you and our listeners have are potentially those. And I think the other cool thing about working with private finance, that certainly that I found over the years, is that there's almost something for everybody. I've met people and you know, we've not been the right fit, our projects, our style, the timings, you know, the amount of money, whatever it might be. And then out of nowhere, somebody or something that, you know, I just never would have expected happens and turns out to be an incredible fit. And I think that I learned very early on when I was raising finance, never to judge a book by its cover, just see where the conversation goes, because, you know, you just never quite know what is under the bonnet. But I think this is advice for our listeners, I think starting to think about this now, like plant that seed now, let it grow into a tree, because you will absolutely need finance. You know, it is the fuel to the property business. And without it, you know, you're not going to go anywhere. So start thinking about that as early as you possibly can. Alongside finance, then, Jack, there's the other big component, which is the deals. And you guys are obviously pretty good at pulling deals together and finding deals. Can you talk to us about how you identify deals? What sort of process you go through? Is it a lot of word of mouth or people coming to you with stuff? Are you just really good at kind of turning stones over? Are you knocking on doors? How are you finding the sites that you are?
Really good question. I actually felt that the two, I might be biased and men might disagree, but I think the two hardest things in property development is finding the deal and finding the money. Yeah, so deals wise, I used to go to events where everyone was like, on market deals don't work. And the fundamentals are the person that's saying that is not creative enough in creating that value. So I do believe on market deals work, and the majority of our projects were on market or are on market. And it's down to us to create that deal. You go to an event and someone say, I've stacked 60 deals in the last month and I can't get any to work. And I say, what categorizes something working for you? And they say 20% on GDV. And I sort of go, well, of course you're not going to find something. And what is already consented or what is already in place on that particular site is going to meet the criteria. Otherwise, 100 other people would have bought this before you. So we try and add value at any stage. So our competitive advantage is finding creative deals. So for an example, I'll run you through our largest deal at the moment as an example. It's 17,000 square foot office space that was part occupied with office tenants. Some were in the act, but they're kind of like sporadically set around the building. So you can't develop it to resi because they're all over the shop. It's getting a terrible income for commercial, and that brings the value of the building down. So we decided to go in, up the rents of the commercial tenants and convince them to condense down to one wing of this 17,000 square foot building. So we upped the rents from £14 a square foot to £18 a square foot. We lost one of the tenants who didn't want to up their rent. And then the other two that were in the act condensed and did basically created their new HQ down one end of the building. We then got planning on what had been vacated, which was now linearly split. So one side was commercial, one side was resi, to 20 apartments. We also agreed an overage on the purchase price. So we got the existing building a lot more cost effectively than the other bidders were coming in at, subject to getting new build planning in the car park, which would have made planning gain even on top of the overage. We're now in planning for new build houses in the car park. So all of this sort of creativity on the offer, but also we phased the site in 4 parts. So phase 1 was deliver 9 of the 20 flats. Phase 2 is the commercial fit out to move the tenants. Phase 3 is to convert the remaining part of the commercial tenants, which is now vacated. And phase 4 is the new build houses. So your finance costs are reduced. Your delivery obviously does straddle a period of time, but because your finance costs are reduced significantly, you're not carrying all of that debt just for the last house to be built or whatever it may be. And that's kind of how we look at things. We look at something and go, what needs to happen to this to get the best thing out of it? How do we squeeze this at every step of the way? And I haven't even gone into detail about, like improving floor plan gross areas, even, other areas of creativity around that. But we look at every deal and we go, what is the most creative, structured, efficient, logical, low risk, effective, in demand? Obviously, you don't create something that's not in demand because it's not going to have a value to it way. And we sort of sweat it and pull it around. And some of our team hate us for that, really where we make our markup. And the way I see it is if you gave a project to, person A, and if you gave a project to us, I would love to think that we've seen a lot of things that we can do that other people haven't. And that's kind of how we fostered our whole sort of mantra of our business. So, and all of our team love that. We're very sort of creative in that respect. And that's how we find deals. So on market stuff, but we try and see it in a different way to others, if that makes sense.
I think the education piece that you talked about earlier, and you obviously still spend a lot of time learning, Jack, as I do. I think the ability to see those creative opportunities in deals, that's certainly where I found a lot of that and learned from others. And it's funny, you've almost just described the exact deal that we're working on at the minute. It's almost the exact same size. We're building out phase 2 of the car park now. We didn't have any tenants in it actually when we bought it, but when we did buy it, it came with the planning, and the planning was a knockdown of an 18,000 square feet building to put a certain number of apartments in there. And actually, we recognize, well, you don't need to knock this down. You can probably get a hell of a lot more inside it. And that's exactly what we did through planning. So, yeah, I think there's some great advice shared that you can actually apply to smaller deals, to deals of any size. In fact, I often see people looking at HMO deals. There's lots of different ways to add value. And I think looking for ways to add that value rather than hoping to find something that just looks like really good market or under market value on the market. I think that's the way to do it. It's a very, very, very difficult gig if you are just looking for undervalued assets, distressed stock or stock that maybe somebody hasn't priced appropriately. Once in a blue moon, they come along. What are the chances that you're the one person that happens to see it and be in the exact position at the moment they want to sell it? Very, very unlikely, in my opinion, just not possible to build a business off. So look and search for those opportunities to add that creative value like Jack has outlined. Jack, it's been a fascinating conversation with you. You guys are obviously doing some wonderful stuff. I mean, I love watching you guys anyway. You do some really cool and really, really nice projects, and you're doing a lot of different stuff as well. We didn't even get to talk about HMOs today, but maybe there's a part 2 in there somewhere. For anyone who's listened today and would like to find out a little bit more about yourself, or maybe is even interested in investing with you, where is the best point to direct them to?
Just anywhere on social media, Jack Jiggens, Jiggens. My Instagram handle is Jiggens Property. Sorry in advance, we do quite a lot online. So if you do come and pick a photo, we like to think it's good value, like yours that you put out there, Andy. But yeah, it's been amazing to be on it and chat through some stuff, and you'll have to come and return the favour on our channel.
Absolutely. Well, I absolutely think it's great value, and I would encourage everyone to go and check it out. But Jack, thank you. It's been an absolute pleasure. I'm looking forward to watching more of these projects come to life, and I'm looking forward to keeping up with your journey.
Awesome. Thanks, Andy.